Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, with an update on the index. And Shawn, let's take a look at the first couple of charts here with technical levels on the Nasdaq-100.
Yeah, so I mean, just looking at the Nasdaq relative to the other indices continues to outperform. Now up about 22.5% on the year. Although it's worth noting the S&P 500 this week was finally able to pop slightly into negative territory, but the other two, the Dow Jones and the Russell 2000, still remain negative year to date so far. So the Nasdaq outperformance continues. Looking at what this can mean, though, when the Nasdaq made this last move higher, it seemed like it really charged higher, and that can become difficult to find significant levels moving forward. Just from a technical standpoint, I always like to try and find levels with a lot of volume. So if you can get something to consolidate at a price level and you see volume build there, that can sort of be at least a stabilizing level moving forward. So now looking at the Nasdaq 100. Because you can't look at actual volume on NDX, just an index, but you can look at the Nasdaq 100 futures to sort of get an idea of where volume goes off there. And we see some volume right around that 10,500, 10,600 level. That's where there's a peak in volume. And this is key because if we do get a little bit of a pullback here, you don't really start to see volume really come in until you get down around that 10,100, 10,000 level. So I think right now, when we get these earnings reports from a lot of these companies, making sure that we don't get significant, disappointing outlooks from management is going to be very important, because right now it looks like a lot of these investors are pricing in positive performance in the past quarter during the stay-at-home period, but they're expecting that to translate into more cash flow and more streams of revenue moving forward, because a lot of these tech companies are now on subscription-based models. So I think right now, management's ability to guide forward that they not only were able to bring a lot of new users on the platform, but they are actually going to expect them to be around generating revenue for the years to come. That's going to be incredibly important. So there's one thing to think about here, and it's called pull through, and it's not a very good thing. It's certainly almost the opposite of what you want to hear if you're an investor. You do not want to hear pull through in any of these earnings reports or any of these management calls, because what that means is, look, we did have some pretty solid growth this past quarter, but all we did was took expected future growth and brought it now. We now have to maybe lower expectations moving forward, or we just think instead of getting 2 people last quarter and 2 people this quarter coming up, we just got 4 last quarter, but it really doesn't move the dial for us moving forward. That can be a big driver of volatility moving forward.
Yeah, it makes you wonder why the market's up the way that it is, considering that that really is what's been happening. We have companies not issuing guidance. And speaking of that, let's take a look at United Airlines, set to report. Of all industries, certainly travel has been impacted. And if we keep continuing on the rate that we are, delaying openings, reversing openings, the COVID-19 cases continue to skyrocket as they have, it's going to be pretty challenging for these travel names.
It is. And so one thing that's going to be important is, looking at what is going to be going on with demand here in the future. I think there was this general expectations that things sort of improved into June and July. But what you want to hear is what your expectations are moving forward. And this is sort of changing and developing day to day, especially over the past couple of weeks. When you get a resurgence in cases, you're now hearing a lot of governors saying, if you're coming from these locations, you have to quarantine in place for 2 weeks, or you're getting, restrictions get put back in place, or you're getting the reopening sort of frozen in time for the time being. That's one thing. If I'm thinking about taking a flight somewhere, I'm either going to have to quarantine for 2 weeks when I get there, or I'm going to have to quarantine for 2 weeks when I get back. I'm probably not going to take that flight. So I think cancellations are going to be incredibly important to look at on the revenue front from United. And then on the expense side, I think you're really going to want to look at their ability to cut some of those operating costs as they've had to scale back on capacity. And then also look at their just CapEx expenditures, their expectations for the rest of the year, because they are expected to cut those as well. So those are two things that you really want to look at on the revenue and the expense front when we do hear
Hmm.
from them around earnings. But that 36 to 31 range after they report their earnings, if they're trading outside of that range, it probably means there was something unexpected below 31, unexpected on the bad side, above 36, unexpected on the upside.
All right, and let's wrap up here with Texas Instruments and to take a look at their earnings as well as some of the key end markets that you're going to be paying attention to.
They really are. And so one thing, Texas Instruments, sort of known as the manufacturing semiconductor company, they put out a significant amount of their sales and revenue actually comes out of the industrial sector, and they've grown that over the years. So that if you look back to 2013, 42% of revenue came out of industrial and automotive. Now they're up to 57%. So it's important to think about, are they going to be beneficiaries of maybe a lot of these manufacturing companies having to go get into a lot more digital, having to modernize, having to really invest in accessibility at their plants, because now you're seeing a lot more of an investment in technology, even during the COVID period, as these companies try to move forward and remain open. So I think industrial is going to be very key for them moving forward. And then also automotive, because there's been a little bit of a trend here. People are trying to decipher, are people buying new cars? Are they going out there and maybe buying some of those used vehicles? Used vehicles would not be beneficial to Texas Instruments. You want to see new vehicles getting bought, because as you get more and more of these features, collision warnings, anything like that in these cars, those usually use Texas Instruments chips to do that. So Texas Instruments, another one that I'm going to be looking at. And then from the price level here, I am going to be looking for about 142.50 to 131 as the post earnings range. Anything outside of that, once again, probably got something we were a little bit surprised by. And then also within their earnings, you do want to look at the analog versus the embedded semiconductor space. Analog is going to be more important than embedded, because that's where you get a lot of those industrial and automotive uses. So analog, also a major driver, very sensitive to changes or surprises out of their analog business for the stock price moving forward. So a lot to watch here out of these two companies, and there's a lot of read through about what's actually going on right now in the COVID era from what these two companies tell us.
All right, Shawn, great stuff. Thank you as always for joining me on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.